42 central banks just did something they haven't done since 1967. They're hoarding gold like the financial system is about to collapse. And here's what should terrify you: they're not telling anyone why. In the next 9 minutes, I'm going to show you what they know that you don't, and why the gold price you see today might be the last cheap gold you'll ever see. Let me put this in perspective. In 2024, central banks purchased over 1,136 metric tons of gold. That's not normal. That's panic buying with a poker face. China alone added 225 tons to their reserves, and those are just the numbers they admitted to. The real figure? Analysts estimate it's 3 times higher. But here's the question that keeps me up at night: what do these institutions know that's making them dump dollars and stack gold at a pace we haven't seen in almost 60 years? The answer involves a secret meeting, a new currency, and a timeline that most people aren't prepared for. And by the end of this video, you'll understand exactly why your bank account might be worth 40% less within 18 months. To understand what's happening right now, you need to know about the Bretton Woods moment we're living through. In 1971, Nixon took the dollar off the gold standard. Overnight, money became whatever the government said it was. For 50 years, the world accepted this because America was the only game in town. But in August 2023, something changed. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, held a summit in Johannesburg. Officially, they discussed trade partnerships. Unofficially, they laid the groundwork for a gold-backed alternative to the dollar. Here's what Reuters didn't report: 40+ nations have now applied to join this bloc. That's not an alliance. That's an exodus from the dollar system. And gold is their lifeboat. But this is just the surface-level story. There's another reason gold is surging that nobody in mainstream finance wants to talk about. Now let me shift gears for a second, because this isn't just about geopolitics. It's about math. Cold, hard, terrifying math. The US national debt just crossed $36 trillion. To put that in perspective, if you stack that in $100 bills, it would reach the moon and back, 12 times. Here's what that means for gold: every single dollar printed dilutes the value of dollars already in circulation. It's basic supply and demand. But here's where it gets personal. Your savings account earning 0.5% interest? It's actually losing 4% per year to real inflation. That's not wealth preservation. That's slow-motion theft. And the people who understand this, the billionaires, the institutions, the central banks, they're not keeping their wealth in dollars. They're converting it to the one asset that governments can't print: gold. So let me ask you something uncomfortable. If the smartest money in the world is fleeing to gold, why are you still trusting your future to a currency that loses value while you sleep? But here's what I haven't told you yet. Everything I just explained? That's the story everyone knows. Inflation fears, BRICS concerns, debt spirals. That's page 1. But there's a page 2 that almost nobody is discussing, and it's far more urgent. 3 weeks ago, the Bank for International Settlements, that's the central bank of central banks, quietly updated their Basel III framework. This obscure regulatory change reclassified gold from a Tier 3 asset to a Tier 1 asset. In plain English? For the first time since Bretton Woods, gold is now considered as safe as cash on bank balance sheets. Banks can now hold unlimited gold as reserves. Think about what that means. The institutions that control the global financial system just officially admitted that gold is as trustworthy as the dollars they print. They're not doing this for fun. They're doing this because they're preparing for something. And what happens next could either make you wealthy or leave you wondering why you didn't pay attention when it mattered. Let me show you what's actually happening in the gold market right now, because the price you see on your screen? It's not the real price. There are 2 gold markets operating simultaneously. The paper market, where banks trade gold contracts that may or may not represent real metal. And the physical market, where actual gold changes hands. Here's the problem: for every ounce of physical gold that exists, there are approximately 100 ounces of paper claims. It's like musical chairs with 99 people and 1 chair. The COMEX, where gold futures are traded, has been experiencing record-breaking delivery demands. In December 2024, physical delivery requests hit their highest level in 40 years. Translation? People aren't just betting on gold anymore. They're demanding the real thing. When paper holders start wanting physical metal and the vault is nearly empty, two things happen: premiums explode, and the official price becomes meaningless. We're watching the beginning of a potential decoupling between paper gold and real gold. And if you're holding the wrong one when the music stops, you're holding nothing. Now, I need you to pay very close attention to what I'm about to say. Because this is where most gold videos get it completely wrong. They tell you to buy gold immediately. Panic. Stack as much as you can. But I'm going to tell you something different, and it might save you from making a costly mistake. Gold has already run up over 40% in the past 12 months. Buying at the peak of euphoria is how retail investors lose money. The smart money doesn't chase momentum. It positions before the move. So here's the framework I use. Look at the gold to S&P ratio. When gold is cheap relative to stocks, you accumulate. When it's expensive, you wait for pullbacks. Right now, we're approaching resistance levels that have historically triggered 15 to 20% corrections. Does that mean gold is a bad investment? Absolutely not. It means timing matters. And in the next 60 seconds, I'm going to show you exactly how to position yourself whether gold goes up, down, or sideways from here. Here's the strategy that institutional investors use but retail never hears about. Instead of going all in on physical gold at these prices, consider a tiered approach. First, allocate 5 to 10% of your portfolio to physical gold or a backed ETF like GLD or IAU as your insurance position. This isn't for profit. It's for protection if everything else fails. Second, use the next correction, and it will come, to add another 5%. History shows gold rarely goes straight up. Patience gets rewarded. Third, and this is the part nobody talks about, consider gold mining stocks during pullbacks. When gold drops 10%, miners often drop 30%. But when gold recovers, miners can double or triple. The leverage works both ways, so size your position accordingly. Here's the reveal I promised you at the beginning. What central banks know that you don't? They know the dollar's reserve status is fading. They know a new monetary system is being built. And they know gold will be at the center of it. That's why they're buying. Not because they're afraid. Because they're preparing. And now, so can you. So where does this leave us? We're living through a monetary shift that happens maybe once every 50 years. The last time was 1971 when Nixon closed the gold window. Before that, 1944 with Bretton Woods. These transitions create generational wealth for those who see them coming and devastate those who don't. Gold at $3,500 isn't the end of this story. Most analysts I respect see 4,000 to 5,000 within 18 months if current trends continue. But remember, the goal isn't to get rich quick. It's to preserve purchasing power while the financial system reorganizes. Your grandparents' generation could save in dollars. Your parents could rely on pensions. Our generation? We have to be smarter. We have to understand what money actually is and position accordingly. The central banks aren't hoarding gold because they're crazy. They're doing it because they've read the ending of this story. Now you have too. The only question is, what will you do with this information? If this breakdown helped you understand what's really happening with gold, hit that subscribe button because we go deep on these financial shifts that mainstream media ignores. And drop a comment below. Are you already positioned in gold, or are you waiting for a pullback? I read every comment and I'm genuinely curious what this community is thinking. Next week, I'm exposing another asset that central banks are quietly accumulating that nobody is talking about. Trust me, you don't want to miss that one.